Good day, good day. How you doing? As Tony mentioned, there's a lot of asinine strategies out there, and the most asinine thing that people do in their investments is fail to have a strategy. And then that's where all these idiots they want the trendy thing, whatever the new trendy hot thing is, and they don't know the fundamentals. They don't know how business works in general, and then they get panicked when they buy something and it doesn't go their way for a moment. And they get panicked, or oh, what do I do? What do I do? Should I sell? Yeah, sell it to me. It's about the right time for it.
Yeah, they sell when it's dropping. And that's generally when you don't want to sell. There's exceptions, but generally you don't want to sell when stuff's dropping.
Yeah, I tend to buy a lot more when there's a company that has good financials or a good financial future. Maybe they're having a tough moment, but they have a great future, and that asset goes on sale. Or those assets go on sale. I love to buy those assets when they're on sale. I love buying high quality things on sale. So I know Tony talked about this quite a lot already, but Kohl's had earnings, Macy's had, it's an exciting week. Nordstrom had earnings, Kohl's had earnings, Macerich, Macy's. So Macerich didn't have earnings, but they had the share dilution regarding paying off their property. They paid off a property that was costing them about $23 million a year in debt. They issued about $23 million a year in for financing expenses at 9% interest they were paying. They issued new shares, which was 8-9% dilution, something like that, which I find annoying. I don't like that. But they paid down the debt. They paid off the debt, and it's going to save them about $23 million a year, and the dividend as it is, the dividend on those new shares, they have to pay about $10 million out. So there's about $13 million a year in real savings there. If they went, reinvested that in, other assets in the company, or paying down other debt, or pushed it out as a distribution, then that's why the stock has been doing well. So. They got over a debt hurdle that they were frustrated with. I don't like this issuance of new shares. I don't like shareholder dilution. A lot of people don't even know that the companies can do that. You might not know this, that a publicly traded company, at any time, for any reason, the board can vote and be like, oh, we're going to issue a new stock.
No, I do. I think I do know about that. It's ridiculous. When I've seen that before, I'm like, wait, they can do that?
Yeah.
When I first saw they could do that, I was like in shock.
Yeah, because so say a company, just for easy math, just for very easy simple math, say a company is $100 million. That's a very tiny company, but just for easy math, $100 million, and you spend $1 million on the stock. You think, all right, I own 1% of the company for my $1 million, and say, oh, we're just going to issue new shares now. Now we're going to issue new shares, and if you don't buy some of the new shares too, now you don't own 1% of the assets anymore. So. Sometimes they do that when they have very bad financial situations in a recession, that they have a debt they have to pay. It's really a last, shitty effort that a CFO doesn't want to be in that spot to do that. But right now, the company is at multi-year highs, and they issued, they diluted shareholders, something close to 9%. I know they authorized about 9%. I don't know if they sold all those shares or not. And yeah, I don't love it, but it was good for the company. Yeah, is it good for me? Yeah, but I don't like being in business with somebody that they do stuff. They did that during bad times. Now they're doing it during good times too.
Yeah, it's crazy. And private companies can do that too, right? When they get new investors.
Yeah, you can. Yeah, and that's all written in your articles of organization. When you form a company, you have the right, or you can amend the articles of organization to say that, or articles of incorporation, depending on the entity, depending what state you're in too. But you can amend those documents to say, under what circumstances you can issue new shares and different classes of shares and voting rights associated with the shares and things like that. So yeah, you can do that, but it just is a general rule. Like, I don't love to be invested in something that now I own a smaller percentage of it. Now my smaller percentage is worth more, by the way. The stock's gone up since they've done this. And I said that. Tony and I were talking about it the other day. I'm like, well, the stock's likely to go up, but I still don't like that they're doing this shit. So just a note, just a nuance. Kohl's, you guys seen what happened with Kohl's? I bought more. I think Kohl's is going to do fine long term.
I bought a bunch of Kohls too.
Yeah.
Overall, the things you've been buying have done really well by me. So.
Well, I hope I don't break that trend. I hope I don't break that trend because I know it's been very good so far. Yeah, Kohl's, I think, nothing more to add that I didn't say before, but my investment thesis hasn't changed. And I'm like, all right, so now the stock is cheaper, and I own damn near 500,000 shares, and that's almost $1 million in dividends that I get. My next dividend is Christmas Eve, so they're going to give me, something close to $250,000 on Christmas Eve. So Merry Christmas, Kohl's. Merry Christmas from Kohl's. Could the dividend get cut in the future? Yeah, of course, the dividend could get cut in the future. Any number of things can happen in the future. Overall, I think it's a good company. I like the new CEO they're putting in there. It looks good on paper. I hope it turns out good in real life. Spent 13 years at Walmart. Spent some more time running arts and crafts store. Michaels was the CEO of that organization, which I think is a pretty good little business. I don't know all the details of it, but I've seen their stores and been in their stores. But I don't know the business. I don't know all the details of their financials. But yeah, they're kicking out the old CEO from who's only been there a couple of years. They're bringing in a new CEO. Looks like a competent person, and we'll see what happens. But overall, they have a good customer base. They're bringing in 17 billion in revenue. If their revenue is down 3% or whatever the hell it was that the stock sold off so much, okay, it went down 3% one quarter. We had a new president. We got a real president again. You got a real leader in the country again. And yeah, there's a lot of positive economic things happening. So I'm pretty optimistic about the future. I'm pretty optimistic about consumer confidence. And if consumers feel confident, they buy shit. And I think there's going to be more American jobs and higher American wages, which I'm not a huge fan of that protectionism, but that's what we're going to have. And yeah, my retailers are going to do better. And those lower skilled workers who make more money are going to go shop at Kohl's and Macy's and Nordstrom Rack. And they're going to go support my other malls because you think they're going to invest their money in stock, or you think they're going to go buy shit? They're going to go buy shit because that's how it is. So that's the type of people they are. So if those people have better jobs and earning more money, they're going to go buy shit, and I'm going to make more money, and that's fine. Good for all of us. Everybody's happy. Everybody's so happy. So yeah, overall, Nordstrom had decent earnings. They sold off a lot today, but they beat on revenue, they beat on profitability, and then the stock was down 8% today, which I'm like, wow.
That's strange.
I thought so too. I thought so too. I was
buy some of that.
Well, I own a lot of it already, so I already own a lot of it, and I wish I paid the same dividend that Kohl's does, and I hope Kohl's doesn't cut their dividend, but they might. But the thing is, folks, is that if you can read the financial statements and you understand the economy actually, not just like you pretend you do, if you actually understand how do the humans think and under what circumstances would things change significantly, you're not going to get stressed out about these things. You're just like, oh, okay, stock's down, buy more.
Yeah, there's actually a few things that you recommended to me that just got beat up after I bought them, but then they shot way up 6 months, a year later. Everything's a way up, but there's things, but there was a couple things that I was like down, I'm like, oh crap, but then it goes up. So it's like long-term investment you look at.
Well, I got to start buying shit a month after I want it then, so to avoid some of that down. So maybe I'm just a month too early on.
Every investment's turned out really good in the long run. There's a couple of things, one or two that got beat up really bad when I first bought it, but that's when you're buying a downward cycle. A lot of times you don't know where the bottom's going to be.
I tend to be buying something where it's getting its ass kicked and it's going down. I think of it, when I talk with other fighters, I kind of think of it this way. And I know you're intelligent and you've done some entrepreneurial things, and we can talk about business, but some of the fighters can't talk about business, but they know about fighting, Yeah. And I think, if John Jones was a stock, some people here don't know who John Jones is, but John Jones is, pretty universally thought of as the best fighter ever, period. And certainly best pound for pound as well. I think he's the best fighter ever in my opinion. If John Jones was a stock and he injured his knee or something, so and John Jones, the fight got canceled. He got injured in training, and a fight got canceled, and he can't fight for the next year. What would happen to the stock?
Gonna go way down.
Yeah, the stock's gonna go down 30% or something. Does that still mean he's not John Jones?
No,
it's still John Jones. Fighter, yeah. It's still John Jones. So if the stock was down 30%, he's not going to fight for the next year. Maybe he's not going to heal good. Never going to be the same. it wasn't that good anyway. And then the haters start chirping.
This one you want to buy in.
Yeah, the haters start chirping. You have all these goofies out there that don't even know shit, but they have an opinion about something. That's when I want to buy the stock. Mm-hmm. I don't want to buy the stock when it's when Conor McGregor wins his belt and then he wins his second belt, and he's knocking people out. Jose Aldo is a very talented person and a well-respected man. He knocked out Aldo in 13 seconds. What's he got to do after that? Like, what's the next thing? He's the first guy to have 2 belts at the same time. Aldo, who's a very tough and talented person,
knocked him out in a few seconds. Yeah,
13-second knockout. Like, if they fought 100 times, how many more times would he knock him out in 13 seconds or less?
Probably not very many. Yeah,
probably none.
Yeah,
maybe he'd win 60 times. Maybe he'd win 70 times. Maybe he'd only win 30 times. I don't know. But I don't think he'd get another fabulous 13-second knockout. I think that'd be pretty tough. So when I look at things like that, I'm like, now I'm looking at like NVIDIA or Apple. That's how I think of that. It's how much higher can it go?
Yes, like financial advisors always want to buy those, but that's just like the dumbest thing ever, because it's like they've already peaked. Yeah, you might be able to get 7%, 10%, but you're not. Apple's not doubling.
Yeah, it's something extraordinary. I don't know what has to happen. Like, they got to start selling phones to Martians, because they have to find a new planet where people will buy iPhones. Because the Earth is already saturated. Everybody that can afford the shit already has it. And they're going to buy a new one, but only so often, and that's already priced in. So, I don't think Apple's a bad company. I think it's been a phenomenal company and an amazing success story in America. You could criticize elements of it, but you could criticize anything. So I think it's a phenomenal company. They've done amazing things. However, I just don't understand how I would get double or triple my money buying Apple. I don't know what the hell would they have to do to triple from their current phenomenal success. And I look at if we go back to the fighter analogy briefly, I look at like a Conor McGregor, like, this guy's done. That guy's done.
Yeah.
But like, you're not gonna that don't mean he can't sell a lot of pay-per-view, but he's not even a top 10 fighter.
Top fighters, yeah. Exactly.
Yeah, he's not even a top 10 fighter anymore. He can sell a lot of pay-per-views, but because he's a good entertainer. But he's an entertainer and a marketer. He's not a top 10 fighter anymore. He's not going to be a world champion in the future. But I don't want to buy Conor at the peak of his career. I don't want to buy him now. I believe in his ability to sell pay-per-view. I don't believe in his ability to win fights against top guys anymore. I don't think he's going to do that. But be mindful when you look at some of these companies. I don't want to buy Conor McGregor at the peak of the hype and hysteria. I want to buy, if John Jones had an injury, like, oh shit, I bet John's got a couple fights left. And he's going to retire someday. I don't think Kohl's is going to be a thriving company in 500 years, guys. I'm not buying Kohl's for 500 years in the future. I'm buying Kohl's because I think in 3 years they're going to be doing well, and in 5 years, if I'm wrong, then maybe it's 4 years, maybe it's 5 years, but I think I can get 2.5 or 3 times my money back, maybe more. I think I get 2.5, 3 times my money back, and get paid a great dividend while I wait. And sweet, I'll wait. And in the short term, if it goes down more, if, it's at $15-ish again right now, $14.75, something like that it closed at. And if it goes to 13, great. I used to buy some at 13 back in 2020, and I sold it for 62 something. I don't mind. If it goes down to 10, then I'm like, shit, I'm going to own 1% of the company because I'm going to keep. I can buy more. So. I don't know. I think I might be wrong in the short term. I might look silly in the short term. If I look at my 5-year returns, I'm beating the shit out of the S&P. I'm beating the shit out of the Dow index. Like 500% versus 100%. I'm beating up the S&P like almost 5x. So for every dollar somebody made owning VOO or some shit, I made almost $5 in that same time frame. So. You can get lucky or unlucky in a month. You can get somewhat lucky or unlucky in a year. You don't do this shit for years and years, and you just got lucky. I'm good at it. I know what I'm doing. I like it. I'm not telling you what to do. You do whatever you want. But I'm just telling you about my decision-making processes. Like when I look at a company like that, it's trading for less than 7 times earnings. They got good earnings. I don't care if their earnings are going down in the short term. There's a lot of economic indicators that tell me that consumer confidence is going to be up, wages are going to be up. A lot of good indicators that unemployment will go up because we're going to fire a couple million government workers, which is amazing. There'll be it'd be a dream. Yeah, if you fired 2 million people that aren't doing anything, who gives a fuck if unemployment is high? Like you just saved the salaries of 2 million dumb that weren't doing anything. So that's amazing if that happens.
We're paying their pensions and
You watch this video all the way through, and that tells me you're dedicated to learning more and earning far above average outcomes in your life. Congratulations for that. But now it's time to take action. If you could have earned those results by yourself, you would have done it already. My head coach has opened up a few spots on his high-demand calendar for an in-person, one-on-one strategy session to help you. On this call, we'll give you the pragmatic advice that you can implement tonight to get laser-focused on the right metrics and leave mediocrity far behind in your past. Click that link right now in the description below and apply for your call immediately. Do it now.